So after the adjusted trial balance, the next step is to prepare financial statements. Let's first look at this adjusted trial balance. Which accounts are balance sheet accounts? Could you tell me which accounts are balance sheet accounts? So cash is a balance sheet account. Account receivable, that is balance sheet. Rent, that's balance sheet as well. Inventory, interest receivable, balance sheet account. Notes receivable, balance sheet. Equipment, balance sheet. Accumulative depreciation, that's balance sheet. Accounts payable, interest payable, note payable, common stock, retained earning. So all of those are balance sheet. Then can you, the rest of those, so sales revenue, that is an income statement account. Interest revenue, that's income statement. Cost of goods sold, income statement. Salary expense. So all of those expense, the rest of those are all income statement accounts. So, and then what we need to do is we take those balance sheet accounts and then to arrange those in proper positions on our balance sheet, and then that becomes our balance sheet. So the balance sheet at August 31st, 2018, the asset side, we have cash, 21,000. Account receivable, 25,000. Note receivable, 20,000. Inventory, 16,000. Prepaid rent, 3,000. Interest receivable, 100. And that is our total current asset. So that totals to 85,100. And then we have our long-term asset. Equipment is a long-term asset. 20,000 minus accumulated depreciation, 500. So that gives us our total asset, 104,600. And then the right-hand side, that's our liabilities and equity. Account payable is a liability, 20,000. Interest payable, 250. Note payable, 30,000. So the total liabilities, that is 50,250. And then the equity part, we have common stock, 50,000. Retained earning, 4,350. And this number, the retained earning, this is actually after the closing entry. So this number we need to calculate it here. You cannot just take it from adjusted trial balance. We need to take this 1,000 plus all of the revenue minus all of the expense, and that will give you 4,350. So the total shareholders equity 54,350. And if you add up liability and total shareholders equity, that will give you total liabilities and shareholders equity, which is 104,600. And then your total assets should be equal to your total liabilities and shareholders equity. Your balance sheet should balance. If it doesn't balance, there's something wrong. So regarding the income statement, for the month of August 2018, sales revenue 40,000, cost of goods sold 22,000. So the gross profit, which is the difference between these two, is 18,000. And then we need to take out operating expense. So we have salary expense 7,000, utilities expense 2,000, depreciation expense 500, rent expense 3,000. So the total operating expense, which is the sum of all of those, that is 12,500. And then operating income, which is your gross profit minus operating expense, that is 5,500. And also we have other income or expense. So interest revenue and interest expense, those are other income or expense. So interest revenue is 100 and interest expense is 250. That will give you our net income 5,350. So that is our income statement.